Ever wondered who holds the strings of the global economy? BlackRock, the world's largest asset manager, might just be the puppet master. This colossal giant manages an astronomical sum, over $8 trillion in assets. That's equivalent to the combined GDP of Japan and Germany. Imagine, if BlackRock were a country, it would be the third largest economy in the world. Its influence stretches far and wide, impacting not just the financial markets, but also our everyday lives. From the retirement funds of millions of individuals to the assets of sovereign nations, BlackRock holds significant sway. It's not just a company, it's a force of epic proportions that shapes the economic landscape of our planet. Yet, this behemoth didn't just appear out of thin air. Every giant has an origin story. So how did this massive entity come into being? Let's delve into the history of BlackRock. BlackRock wasn't always the behemoth we know today. Its story begins in 1988 in a single room with only 8 people. Among them was a visionary named Larry Fink, a man with an ambition and a dream to create a risk management firm. Alongside him were other founding members, Rob Capito, Susan Wagner, Ben Golub, Hugh Frater, Ralph Schlosstein, Keith Anderson, and Charlie Hallack. They had one shared vision: to redefine the way risk was managed. Larry Fink, the charismatic leader, had a knack for understanding the financial landscape. He had witnessed the financial crash of the mid-80s and knew that risk management was the need of the hour. This understanding became the cornerstone of BlackRock's foundation. The 90s saw a surge in BlackRock's growth. It was a decade of expansion and recognition. In 1992, BlackRock became the first ever fixed-income asset manager for the World Bank. This was a monumental achievement that put BlackRock on the map. But it wasn't all smooth sailing. The financial world is an ever-evolving beast, and BlackRock had to adapt. In the mid-90s, BlackRock made a strategic pivot. It moved from being a risk management firm to an asset management firm. This was a calculated risk, one that paid off handsomely. It allowed BlackRock to broaden its horizons and tap into new markets. By the end of the 90s, BlackRock had become a trusted name in the financial world. Its innovative approach to risk management and asset management had set it apart. It was no longer just a firm, it was a brand, a symbol of trust and reliability. The small risk management firm had transformed into a global asset manager, but this was just the beginning. The turn of the century would see BlackRock reach new heights, but that's a story for another time. For now, let's appreciate the journey so far, the journey that turned a single-room operation into a financial titan. In the early 2000s, BlackRock embarked on a journey of aggressive expansion. The turn of the millennium saw the company, which was already a respected player in the financial world, setting its sights on becoming a global powerhouse. The first major step in this expansion strategy came in 2006. BlackRock made a bold move, acquiring Merrill Lynch Investment Managers. This was a notable achievement, as Merrill Lynch was one of the most recognized names in investment management at the time. The acquisition not only added a significant number of assets to BlackRock's portfolio, but also enhanced its reputation in the industry. However, the company was far from done. 3 years later, in 2009, BlackRock made another significant acquisition. This time, it was Barclays Global Investors, a leading player in the field of investment management. This acquisition was a game changer. It not only increased BlackRock's assets under management exponentially, but also gave the company access to the lucrative exchange-traded fund market, thanks to Barclays' iShares business. These acquisitions were strategic masterstrokes. They allowed BlackRock to diversify its offerings and reach a wider range of investors. The company now had a comprehensive suite of products and services, catering to both institutional and retail investors. It was no longer just a bond shop. It had transformed into a full-service asset management company, offering everything from equities to fixed income, from alternatives to multi-asset strategies. The success of these acquisitions was evident in the numbers. BlackRock's assets under management swelled, catapulting the company to the top of the asset management industry. Today, BlackRock stands as the world's largest asset manager, a testament to its successful expansion strategy. But acquiring other companies was not the only way BlackRock expanded. The company also invested heavily in technology. developing sophisticated risk management and investment tools. This focus on technology set BlackRock apart from its competitors, further cementing its position at the top. These acquisitions propelled BlackRock to the top, making it the world's largest asset manager. The company's journey of expansion, a testament to its strategic acumen and vision, has truly been a remarkable one. But with great power comes great controversy. BlackRock, the financial behemoth, has not been without its share of criticism and controversy. One of the major points of contention is its role in the financial crisis of 2008. As the world's largest asset manager, BlackRock was pulled into the spotlight for its involvement in the crisis. There were allegations of the firm's profiting from the very crisis it helped to create, a crisis that left millions of people across the globe in financial distress. A decade later, the company found itself at the center of another controversy, this time related to the environment. BlackRock has faced criticism for its investments in fossil fuels. While the world is moving towards renewable energy sources, BlackRock's significant investments in coal, oil, and gas have raised eyebrows and questions about its commitment to sustainable finance. Critics argue that BlackRock's fossil fuel investments contribute to climate change, a global crisis that poses a threat to economies and societies worldwide. In addition, there have been allegations of conflicts of interest. As an asset manager, BlackRock manages the investments of a multitude of clients, from individuals to corporations to governments. However, it also invests its own money. This dual role has led to accusations that BlackRock could prioritize its own interests over those of its clients. Then there are concerns about its sheer size and power. As the world's largest asset manager, BlackRock holds significant sway over global financial markets. This has led to concerns about the concentration of power in the hands of a single entity, and the potential for BlackRock to influence markets and economies in ways that may not always be in the public interest. These controversies have raised questions about BlackRock's influence and its responsibility to society. As we delve deeper into this financial giant's history, we'll uncover more details about its operations, its impact, and the ongoing debates surrounding its role in the global economy. Beneath its financial prowess, BlackRock harbors secrets that few are aware of. It's not just a colossus of the financial world, but also a technological powerhouse. One of BlackRock's best-kept secrets is Aladdin, its risk management software. Aladdin, an acronym for Asset, Liability, Debt, and Derivative Investment Network, is a system that combines analytics with portfolio management, trading, operations, and risk management tools. But it's not just used by BlackRock. In fact, Aladdin helps to oversee approximately $54 trillion in assets globally, which is more than the GDP of many countries. But BlackRock's secrets extend beyond technology. It's a significant player in Washington, with its lobbying efforts reaching far and wide. Its influence has been felt in everything from financial regulations to environmental policies. BlackRock doesn't just react to policy changes, it helps shape them. It's been known to hire former government officials, strengthening its connections and influence. And while BlackRock has been open about its lobbying efforts, the extent of its influence is often underestimated. It's not just about influencing policy, it's about shaping the world's financial landscape. But perhaps the most intriguing secret is BlackRock's role in the global economy. As the world's largest asset manager, it has a hand in virtually every sector. It's not just an investor, it's a stakeholder in the global economy. From tech startups to energy companies, BlackRock's impact is felt far and wide. And yet, despite the enormity of its influence, BlackRock often operates behind the scenes, its power hidden from view. It's a testament to the company's success, but also a reminder of the enormous responsibility it carries. As we've seen, BlackRock is not just a financial giant, but a complex and influential entity that shapes our world in ways we may not even realize. Today, BlackRock stands tall as the world's largest asset manager, but its journey is far from over. At present, the financial giant oversees more than $7 trillion in assets, an amount larger than the GDP of most nations. But the road ahead is not without its hurdles. As the world becomes more conscious of ethical finance and sustainable investment, BlackRock faces increasing scrutiny. Its future plans are ambitious, aiming to expand its footprint in emerging markets and redefine the landscape of asset management. However, these plans are not without challenges. The firm must navigate the complex regulatory environment, the expectations of its stakeholders, and the ever-evolving world of finance technology. Amidst these challenges, BlackRock continues to shape its strategy, adapting to the changing tides of the financial world. BlackRock's story serves as a reminder of the immense power and responsibility that comes with managing trillions of dollars. As the firm charts its future course, the world watches with bated breath.